Hey traders, welcome. Good morning. Hope everyone had a great weekend. Of course, this is Charts and Coffee. Time to take a look at some charts together. If you have any questions, as always, feel free to type them on in. Earlier the better. We're going to take a quick peek at what's going on in the indices and the treasuries. This is the week of FOMC. Are we expecting any rate changes? Absolutely not. However, what's in play is whether or not the expectations for it can increase for September and if they can stay steady for November and December cuts. So we're down to maybe 1 to 2 rate cuts. If for whatever reason, and the inflation data is not really supporting it, but if for whatever reason Powell opens up September, all-time highs, here we come. I'm not anticipating that at all. But I don't want to be bearish, right? I don't want to be bearish through this couple of months through summer because there's still a lot of expectation that the Federal Reserve is capable of doing what? Capable of cutting maybe come September, but most definitely November and December. And rate cuts aren't bearish, and neither are all-time highs. We hit one in the NAS, as you can see here, just on the 7th, right? So we know that a lot of that has to do with Apple and NVIDIA. NVIDIA's event is done. Whoever had the stocks as of the close on the 6th got their shares as of, I guess, the close on the 7th. And now we would anticipate some profit taking in NVIDIA and then also some weakness in semiconductors, but not a weakness that's anything more than, frankly, buy the dip. So we're going to keep an eye on that throughout the week. And so first question up this morning is, I thought I saw AMD. There we go, AMD. So what would I anticipate with AMD? Well, if we take a look at what's actually trending in the SMH, it's NVIDIA, Taiwan Semi, ASML, Qualcomm, Micron, and AMD. So those would be one of the 6 uptrends that I would be interested in specifically. Is it as strong as, say, Taiwan Semi or any of the other 5? No, it's probably the choppiest, but it is bullish and it's a rather fresh uptrend. So as long as it's sitting where it is with the structure that it has and the color candles that it has, a pullback to the daily price movement range or even this Darvis level would absolutely be fair game. But I would say this, if you venture into AMD, and this would really only apply, I'm looking at my other screen where the semiconductors are sitting. This would only apply to AMD. So what do I mean by that? This strategy that I'm going to lay out would be what I'd look for. Group, you've got your support down in here. You've got your expected resistance up in here. Would I expect resistance to be broken in an uptrend? Yeah, the probability is that we'll continue higher at some point. But let's just imagine if we stay stuck in this range, right? In this range in here. So let's presume that, which means I want to be buying as close to the bottom of the range as possible and think about taking some profit at the top of the range. And that's the way I would treat any market that's sideways or something like AMD where, you know, we can consider this a fairly fresh trend and probably still vulnerable to the chop that preceded it. I mean, it's only been a trend since Thursday. So it's, again, a fresh trend. And fresh trends are vulnerable. They're vulnerable to going back into the chop that they came from in this case. So I would look at this as remaining range bound until we get that Momo breakout through here. But the best way to position yourself is down in this area and just be cognizant of the resistance at about 174.5. All right. Trader Momo asks, am I still doing Sunday night? Yep, it's there. Trader Momo at my YouTube channel. It should be. And over at the Simpler Trading YouTube channel, as well as my Twitter feed. So yeah, every Sunday. Well, I shouldn't say every Sunday. If we have a bank holiday on Monday, I've been enjoying the 3-day weekend. But if we don't have a bank holiday on Monday, you will find the Top Tier Outlook show there on Sundays. All right. What about Natty Gas? All right. BC, here's the story with Natty. Let's go on over to Natty, aka the Widowmaker. I know, but it can be really volatile. We're in an interesting stage. So let's do this with Natty. First of all, it's in a really strong trend. It took a little bit of a break, but again, this is such a great example of even when a trend gets a little sideways like it did in here, am I presuming a move to the downside? Oh gosh, no. I don't hate my money, right? And I know you don't either. So what we would expect is a resumption of the trend. That's exactly what we've got. Now, let me bring up this. Hang on one sec. All right, let's go on over to, there we go, and take a look at natural gas. So we could do this through the NG futures. Let me just look up natural gas. All right, so I'm looking at natty gas. And do I have the NG contract here? Well, this is fine. Let's just do this. Okay. What is the typical trend? Now, interestingly enough, when you take a look at natty, this is the last 10 years of behavior. A lot of times we're going to have, just like the summer driving season for unleaded gas starts in March, April, the rally in natty usually starts in summer during the summer months. We'll start to see this breakout type movement. Now, this is usually anticipation for summer, right? This is not a winter demand unless it's a storm or something like that. Now, notice by the time we get to winter and the demand narrative starts to kick into high gear, we've already bought the expectation that, oh my gosh, winter is coming, right? So remember, it's always a preparation for, we're always looking ahead. What do we expect? We expect winter. So if it's a harsher than expected winter and the heating degree days are moved up by the EIA, the Energy Information Administration, we could see higher highs even into September, October. But barring that, summer expectation was factored in February, March, and winter demand expectations will be factored in now. So there's a nice 10-year seasonal trend. Now, this doesn't override the price trend. We want to see these both. We want to see the seasonal plus, right, the price trend. So you've got a lot of wind at your back in terms of the seasonality and expectation for more strength, more demand in natty going forward. All right, BC, thanks for the question. All right, next up is Texas Jiu-Jitsu. All right, awesome. What about V? All right. So if we're taking a look at V, if I crack open the XLF, and this is where Visa is the, I think, third strongest, heaviest weighted stock in XLF. XLF is not one of the leading sectors at the moment. I'd be careful, but the best look in XLF is actually Bank of America, probably followed by Goldman and JP Morgan. So be careful with Visa, and the same would apply to MasterCard, and treat this like the chop that it is. So once again, much like we just did in AMD, let Darvis do the heavy lifting. Let it put an unbiased pair of levels, your Darvis box. So up here, you've got your resistance. Down here, you've got your support. And I would anticipate the selling pressure and the buying support coming in, right? So Visa is going to be a little tricky in that regard. I would probably steer clear of Visa for now, but if we get a visit to, say, the bottom quarter of the range, that'd be a pretty good spot to buy calls. But I won't buy momentum right into resistance. So I'm going to expect there to be resistance that holds up in there. All right, next up is GE. So I'm looking at GE. So again, where would I look at GE if I'm cracking this thing open, trying to sort out where the importance, the sector, the weighting is at? So this is going to be in the XLI. XLI has been pretty heavy because Dow has not been benefiting from the strength in tech and in semiconductors the way the S&P and the NASDAQ have been. So Dow's kind of choppy. Industrials are weighted in the Dow, about fourth or fifth weighted. So I would say GE is definitely neutral right now, but it was bullish. It was really bullish. So I would most definitely be a buyer, but where? You guessed it. I'm going to wait for price to sink into one of two spots, either this really nice Darvis support that's sitting down right in here. Okay. So I love that. I love what you're thinking about in terms of 1 hour or daily. I'm going to break down the daily because here's the thing about the 1 hour, Groot. When we look at the 1 hour, make sure that the structure is dominated either by a trend, which we may or may not have on either, but that you have at least green or yellow candles on that time frame. So that being said, if GE can sink down to the daily price movement range, that would be a go. Until then, just let it flop around. I would not be a short seller on GE or long puts. However, if we get down to this area, most definitely, with the trend being up, I'm still going to expect through this chop continuation, right? So yeah, great question. And by the way, I love the specificity on the time frames. Thank you so much for letting me know what you're looking at, so we can look at the structure of that time frame, because that's as specific as what symbol we're looking at. I could look at a 5, a 1 hour, a daily, or even a weekly time frame, and each could have a different structure that would lead to a different setup. Or as we say in the Sector Secrets Mastery, structure dictates strategy. All right, so next up is Ben's asking about Hood. Sure. Hood should be kind of waking up a little bit with the GameStop narrative. Isn't it funny how right around the time that GameStop starting to go berserk, so is Hood. So I would say that as long as GME is having a moment in the sun, Hood will probably benefit. You can see there. You look at how this thing kind of woke up. All right. And as long as Roaring Kitty, I just call him Hello Kitty, is continuing to, keep the discussion about GME in play, Hood's probably going to benefit. It doesn't have a trend. I certainly don't want to be bearish. A pullback to 20 would be fine, but I fear that the support in Hood is likely going to last as long as the interest in GME is lasting. Now, if it can prove itself to have more sustainability in terms of the bullishness past the GME narrative, great, but I wouldn't anticipate it. All right. But yeah, I would stick to the long side. I would wait for a pullback. But remember, let's just forget the when the GME narrative just crumbles, and it will. I don't know for how long it will continue to move the way it's moving. But as long as people are talking about it, you can probably look for buy the dips on Hood. All right, AES. This is a mean reversion. It's right around 20, which we like. I would take a look at the volume at around 20. Let's do this. Let's open up AES. So what I want to do here is at least the volume for this quarter. So I'm going to squeeze into about April. What's really interesting is right where we sit. Take a peek. David, see that little volume ledge right in there? That's accompanying that pullback. If that doesn't hold, we could be below 19 and even down to about $18 pretty quickly. And then keep an eye on this resistance here around 21. So you have an interesting narrative where you buy around 20. You can probably ride at the 21, but if it breaks 20, you're probably heading down to just below 19. And that would actually create an upside down risk reward ratio if you're looking at those two levels for management. Be careful. It's probably about a rough 1-to-1 risk reward here, but the trend is up. So I would favor clearly the upside. Yeah, I would favor the upside for sure in that regard. Okay, next up is Thomas asks, now that NVIDIA split, do I think it will be more or less of a market leader? Now that it's split, well, I'm looking for a pullback in the wake of the split. And I would say a pullback along the lines, let's see where we are right now. I would look for a pullback really minimally to somewhere between 5 and 10%. So it's not going to surprise me if we hit 119. In fact, we should pull back at least 5% with the post split. So I would keep an eye on that. And then if we're going to move a little bit past that, we could close in on about 113. I'm not looking for a mean reversion down near 100, but I would look for a little bit more weakness, because look, the traders who have no intention of holding NVIDIA through the split. In other words, there's a huge group of traders that really weren't in it for the 10-to-1, were they? They were just in it for the anticipation of and the hype, the rally, the strength into the 10-to-1. So that narrative ended the 6th and 7th, right? On the 6th, you had to hold it to get the 10-to-1. So you knew there'd be at least some hold through the 6th. On the 7th, probably a little bit more, because folks aren't necessarily going to dump it on the day of the split, although there was quite a bit of weakness on the 6th Why? Because if I'm a trader, I don't need to hold that stock. I'm not looking for the 10 to 1, right? If I've got long calls, I'm likely going to start to take profit, knowing that the typical historical reaction to a post-split stock is about up to a 10% pullback. Now, because NVIDIA is so strong, it's not just a split narrative. There is a fantastic demand narrative. The company's doing very well. The chips are in demand. So I wouldn't expect anything more than a 10. We may not even get the 10%, but we've got the 5% pullback. And so now it's really a matter of whether some semiconductors can continue higher and whether or not by selling off about 5%, this stock becomes attractive to traders again. And I would anticipate that's a yes, because aside from the split, look at the structure, right? It's bullish. So I would expect by the dip to still be split or no split what traders will look at. Now, as far as a market leader goes, look, anything that's heavily weighted, right? Those Magnificent Seven. I would take Tesla out of the Magnificent Seven and put in, say, AVGO. But as long as those Magnificent Seven are moving higher, those are heavily weighted stocks in the S&P and in the NASDAQ. Do I consider NVIDIA a leader? I mean, it's been very, very strong. And with the weighting, it can continue higher. But it's really going to need for the indices to continue to move higher on that strength. It's going to need the help from at least a good chunk of those other 6 stocks. But I certainly wouldn't consider it a short in any way. Buy the dip would definitely be something to look for. Okay, what about CVS? Question is, a gap fill to 67? Well, so trades are not targets, right? So a gap fill would be a target. That's the way I look at this. If CVS is going to head up to about $67.50, cool. But where do we get in? So this is just where do we get out, or where do we scale out, right? That's only one half of the conversation. The other half is where do we get in? So assuming you're in already, sure. I mean, I think that would be a really solid, probably second, if not third target. The initial target that I would look for on CVS, depending on where you got in, is probably scaling out at one of these gold zones. If you're not in, get in at the gray zone. But yeah, that would be a reasonable target. Do we get there eventually? When? No clue. However, as long as we have green candles and we're supported by the gray zone of the price movement range, yeah, that's probably very likely. All right, next up is Meta. All right, taking a look at Meta. Look, Meta, we talked about this in Charts and Coffee. You know, if you've got a resistance level and a support level in a choppy environment, which is what we had for a really long time, the best way to take advantage of this is to buy on these tests of support, with the second target being breaking through the resistance, which we have now. And this is most definitely helping XLC. So the XLC ETF is moving higher. Meta is the number one weighted stock. We have a fresh uptrend. So now, you know, we could look at the mean reversion. We could look at even the daily price movement range for movement higher, and even a retest of that resistance level, which is sitting where the daily price movement ranges are as of Friday. So I would look to the long side. I wouldn't be a short seller here at all. So in terms of what to do, oh yeah, it's buy. But it was even a buy through here, right? When we had the yellow candles, that was, you know, that would just be a buy based on the Darvis oversold support, as opposed to now we can start applying some trend strategies to it. All right, our final question for the morning is, what are my thoughts on comparative weakness in the Dow? It's really simple, Alex. The sectors within the Dow are not performing in the same way as the sectors and stocks are in the S&P and NASDAQ. The SMH and the SMH, NVIDIA, the XLK, Apple, those two narratives have a lot more influence in S&P and NAS. Remember, the number one weighted sector in the Dow are financials. And financials are not, as I mentioned before, are not looking great. Energy, not looking great. And that has a far more disproportionate weighting, a far more greater influence on the Dow. And as long as those sectors are laggards, tech and semiconductor strength alone is really not going to help the Dow the way it has the S&P and NAS. So thanks for the question. All right, gang, as always, thanks for being here for Charts and Coffee. I'll see y'all tomorrow, same time, same station. Be good to each other.